Hey everyone, welcome in to another daily editorial here on the KE Report. We're chatting with TG Watkins. We're going to be discussing initially some of this recent market weakness or more just choppy market behavior. Then we're going to get into some metals and commodities, precious metals, and some of the underlying stocks there, at least the ETFs, as well as uranium and nuclear options that TG is seeing, opportunities, I should say. T.G. Watkins is the director of stocks at Simpler Trading, also the editor of the Profit Pilot website, which we will put a link to in the show notes. TG, let's talk markets. There were a lot of our commentators coming on at the tail end of last month saying Q4 might be rough for the markets, a little bit of a loss of momentum at the end of Q3, and quite frankly, just look at how well markets have done this year to date already. It's interesting that we saw a bit of choppiness last week, and the VIX volatility is staying elevated while these markets haven't totally fallen out of bed. But just even today, as we started recording, we were seeing a kind of drop in the markets, more than kind of a drop. What's your thoughts on market weakness, the overall stability of markets around these levels?
Well, let's first just acknowledge that the SPX is at all-time highs. And we did actually just, 2 weeks ago, we broke out from the previous high, which was mid-July. So, there's really nothing bearish about this. The only thing I can say is that leading into where the FOMC, the Fed, cut rates by 50 basis points, the market was already up and then it broke out even more on that news. And since then, it's been consolidating. So it's a little hard to say that there's weakness. I think that there's consolidation right now. So I do think that we are going into a rate cutting cycle, which I think is going to be generally bullish for the market. And you can see that with the new all-time highs. But now we're going into the election, and with the VIX being up, it might be showing that there's some nervousness and some uncertainty. And so we very well could just see the market hang out. I'm still bullish. I'm still leaning bullish on pretty much everything. And you just might need to deal with some chop in between. It kind of reminds me of last year around, let's see, April, May of 2023. You can see the S&P also got over its daily 50 and then chopped around for a few weeks as the debt ceiling crisis was the topic of the week. And then once they resolved that, the market took off again. So that's kind of where I'm at is, I might just need to sit on their hands for a little bit and let these positions work themselves out over the next month, I guess.
Well, TG, just to that point, if there is some, I guess, tenuous traders out there because they're waiting to see how the political election resolves in the U.S. and which set of economic policies are going to win the day, obviously that'll affect different sectors. Do you have any outlook as far as if things tend to chop sideways for the next couple of weeks, and then suddenly there's, a winner, one way or the other? Do you think there's certain sectors that'll benefit or that could be underperformers in either scenario?
Well, yeah, of course. And once we have an administration that we know about, then the powers to be are going to put their money behind it. I mean, the biggest example was during COVID when we had Biden get elected. Just okay, what are the Democrats about? What is their administration about? And then that's when we got AI or EVs and battery powers and windmills and alternative fuels and all these kind of things really ran. Even cannabis ran because of all those things. Not to mention that the having interest rates low was also helpful. So the market will, of course, have certain areas that benefit from either the same administration or a different administration. You just need to know which one it is and where those chips are going to fall.
Yeah, very true. But hey, it always helps when we have an election behind us, a little bit of clarity. But hey, look, there's still a lot of gray areas in terms of what certain policies will do for different sectors. Let's get into the precious metals because they continue to be standout sectors as well. Gold still in the high 2600 region, recently was right around that 2700 region. Silver is now establishing itself over $30 at right around $32 right now. TG, do you see any end in sight for these uptrends that precious metals are in?
No, they look pretty good, and I have a lot of people talking about gold going even higher. We're talking about 2,900 and even 3,000 as far as potential price targets. Hey, seems reasonable to me once these things are on a major trend, because I mean, gold has been in consolidation mode for years, and then we kind of started getting this wedge to the upside, and then we finally broke out, and I think that there's a lot of energy being released in that, and a lot of demand probably as I don't know things go on with interest rates and yield curve and all that kind of stuff that's coming up. But yeah, it's definitely on an uptrend. Now, maybe right this moment, it may not be the best time to initiate or add to your gold positions. It seems a little extended, so maybe a little pullback or flag or consolidation would be in order. But yeah, it seems like it's on an uptrend and doing well. And then as far as silver, same thing. I mean, that pattern actually looks fantastic on a monthly and weekly basis. I'm looking here on the monthly, and it's basically broken out and flagging above its previous all-time high, or at least the most recent high, which was back in late 2020, early 2021. And so that looks like a area of support consolidation. So yeah, absolutely. Now, I would just say near term, hovering around $29 for silver is also at its recent previous high from May. I have a feeling it's going to take a little bit of work to get through that, so don't be surprised if there's a little bit of a pullback, maybe into the daily 50 or somewhere around there before it actually breaks up and goes higher from this point.
Well, TG, let's also dive into the gold equities via the ETF GDX. GDX has been on a good run recently. I think a lot of people, if you looked at it in the short term, would be excited to see higher highs, higher lows, staying above the 50-day moving average. But when you look on a longer term chart, it can't seem to even break above where it was in the 2020 peak. It just barely got above the 2022 peak recently, even though gold has been consistently blasting up all year to new all-time highs. So the gold equity is not really the same kind of chart as gold, but how are you looking at GDX?
Yeah, it's generally the same thing. In fact, some people have talked about that there might be kind of a catch-up trade. If gold and silver and precious metals continue to move up and GDX kind of isn't moving in lockstep with them, then perhaps GDX is going to have a moment that it has to play catch-up, and there could be an acceleration in that. Yeah, I don't know if that's going to happen or not, but GDX is definitely on its way to moving up. Now, maybe from a technical standpoint, let's see, last 3 months has been a little bit choppy on the way up. And so maybe it's kind of reaching that area you said, like from 2020 and 2022 as resistance. And so it might need to do a little consolidation and, flagging, pullback, whatever, in order to find some more support before really going up. But it's broken long-term trend lines and it's in a bullish trend. And so just kind of pick your spots. And I think we're still going to see higher prices with this into the future.
Okay. So generally bullish there. Precious metals and the underlying, at least gold stocks for GDX. Let's talk uranium as well, because uranium really got moving, let's say 2020, 2021, and early on this year was still looking strong, but then went through a bit of a pullback in more or less, I guess, Q2-ish, maybe Q3, more the middle of the year. But just last month also rebounded, found a low and rebounded quite strongly, including the uranium stocks. What's your outlook for uranium? Was that a solid low in your eyes?
Yeah, we've talked about uranium numerous times in the past, and generally speaking, every time we talked, it was like, yeah, it's on a good long-term trend. Maybe occasionally I said, okay, hey, we could probably do a pullback. This last pullback that you're kind of talking about over the summer, from a longer-term perspective, that would have definitely taken me out or stopped me out, or you need to be like, oh, okay, that's too big. We need to reassess. So I most likely would have been out. And this turnaround was really pretty fast and quick. The best entry that I see was basically early to mid September. If you actually look at, say, CCJ, you can see the price popped up after the overall double bottom and flagged right into the hourly 50, and that started its next two trends. So if you got any chart technicians out there and you guys look at this, that was a really good, clean setup. And at this point, it's a little too far gone to add or initiate. I'd really wait for some sort of healthy pullback to get in on this thing, because it looks like it's resuming its uptrend, but you don't want to just go chase it. So there should be opportunities in the future if you can, find them.
Well, and TG, we were also talking off mic that there's some opportunity because of the interest in AI and data centers. There's an interest in where is all the electricity going to come from and in nuclear power. But there's another way to play the equities, and that's with the companies either involved in utilities or involved in making new modular reactors. So you had a couple ideas there for us.
Yeah, absolutely. And this has been a thing that I've been watching and trading as well. So SMR, for small modular reactor, is, I think, one of the more well-known names as far as that goes. So yeah, SMR is its ticker. I've been in and out of this thing a few times. Currently, we're in it and doing well with it. Lots of volume is coming in on the higher time frames. It's over the last couple months, it pulled back into the monthly 10, found support, and it's up again. So, and it didn't even really care about the market pullback. So I think it's looking good. NNE is another one. This one, again, the chart looks absolutely fantastic on it. It just came out of a long-term double bottom and cleared its daily 50, and the weekly chart looks good. So we're in this one too, and it's treating us well. And then there's OKLO. This one's got a weird looking chart. I don't know if it used to be something else and then they just haven't gotten rid of the history or who knows what, but it's kind of gone for a wild ride. It's been doing well also, but I think I'd rather wait for the chart to clean up and kind of find a better entry into this one. So those are the three that I'm really watching closely.
So TG, since you buy into this whole nuclear, I guess, renaissance here and a longer term bull market for this sector, what do you do when you construct a portfolio then? I realize you look at individual stocks, but there are different ways to play this bigger picture trend. So how do you go about balancing out your exposure?
Well, I really go from the charts. And so that's why, okay, LO, I haven't purchased anything yet. And then as far as SMR and NNE, again, I kind of wait for these things. I was trading SMR, let's see, April, May, June of 2024, and I was participating in that run that got me well over 100%. And it was a vertical ride and it's too far, too fast. It started going outside of some of my parameters. And so I sold it. And it, in fact, came down and came up pretty hard. So I was just kind of waiting. And then I started looking for an entry on SMR basically right around close to $8. And that was coming into the beginning of September. And then some of my Moxie indicator triggered. And then, we started getting in around September 10th or so. And that's when it crossed over the hourly 50 and proved that the double bottom was going to hold and it changed trend. And so now I look at this and I say, we've had a huge move up. It got a little overdone. It now pulled back to support, did a double bottom, and now we're off to the races again. You do that, you look at NNE, you look at uranium, and you're like, wow, this whole sector is doing well, and it just pulled back to major long-term, higher time frame support. Seems to me like this thing is going to be off to the races for quite some time, and I think it's going to be a pretty healthy thing to just kind of keep in your portfolio. Don't buy it at the tops or anything. Try and find dips to get into it. But yeah, between NNE and SMR and even OKLO to a lesser extent, these things are all setting up on higher time frames.
I'll just throw one more at you, TG, and that's a pretty widely followed ETF in the uranium equities. It's URNM. And in this particular ETF, it's a basket of stocks that also has some exposure to the physical uranium underlying it in the Sprott Uranium Trust. So you're getting a basket of mining stocks and uranium itself. Do you have any technical thoughts, resistance, support, since a lot of people trade the URNM?
Yeah, absolutely. So let's see if I can kind of explain this verbally. But for what I'm looking at, it pulled back longer term, almost looks like it gave back probably 50% of its up move, but it also had a double bottom over the last couple months. That's great. And that double bottom looks like it came into the monthly 50, the weekly 200, fantastic areas and levels. But this bounce is just what I call the first move. And this is where, for example, in this case, it's gotten over the downtrending daily 50 SMA. That's great. It's at least broken past what was resistance. Now I want to see it basically test support. So I'm going to be looking for this thing to do what I call the second move, and that's where it pulls down into an uptrending moving average, something like the daily 50. It may not be perfect, it might be around it, but that's the idea. And for me, that's going to be the next area that I would want to get in on something like this. And that's why I said earlier with the uranium stuff, like, hey, if you didn't get into uranium after that double bottom and this big move, you're going to have to wait for a pullback. I'm pretty darn sure it's going to happen. That always does. And then you just kind of find the right spot, get in, and then as long as it confirms and continues to move up, it should be a great spot. And we'll see if this can continue moving forward. But with the whole narrative, and that's kind of the thing about the stock market, is you have to figure out what's the narrative. And for uranium, I really think that AI is going to be that, because I think the conversation started with crypto and how are we going to power crypto, but then Bitcoin and crypto and all that kind of stuff, it's kind of gone out of favor a little bit, and trying to find, is it a niche thing? Is it really going to be accepted by society? But AI really is, and everyone is doing it, and there's a huge demand for it, and it really is the next thing. And so we got to figure out a way to power this thing, especially when we're trying to get away from fossil fuels, but renewables are not quite there yet. We don't have the energy storage ready yet. And so I think that nuclear, especially with our modern technology and new designs, is really where it's at.
Hey, you're right. That narrative around nuclear has definitely changed the game. We're seeing stocks perform better, and we're even seeing major tech companies start to throw their name in the hat for how they're going to power some of their AI data centers. Seems to all be going in that direction, but hey, as you said, trading strategies around that, maybe wait for that next pullback. We'll follow up with you, TG, because we do talk to you every few weeks. I always look forward to our conversations. Again, TG Watkins, Director of Stocks over at Simpler Trading, also editor of the Profit Pilot website. TG, thanks for your time today.
Great. Thanks, guys.